Hello and welcome to ActivTrades Weekly Outlook. This week, investors will likely focus on the latest inflation and GDP figures from some of the world's largest economies. As numerous central banks report having attained their interest rate peak in recent months, persistent inflation and robust economic growth are placing renewed pressure on past strategies. Let's dive in. Germany's IFO Business Climate Index is published on Monday. With a reading of 85.7 in August, the index hit a new low not seen since October 2022 and fell short of market forecasts. A dramatic drop in corporate optimism reflected a continued struggle with high inflation, rising interest rates and falling demand as a result of the global economic slump. The new data is expected to show a further dip to around 84.3 for September. From the US, the Conference Board Consumer Confidence Index fell to 106.1 in August from a revised 114 in July. The dismal headline figure reflected declines in both the current conditions and expected indices. Expectations are for a further dip to around 105.9 when the new report is released on Tuesday. In July, sales of new single-family homes in the US increased by 4.4% to a seasonally adjusted annualized rate of 714,000, the highest level since February 2022 and exceeding market expectations of 705,000. A similar figure of 700,000 is expected for August when the new report is released on Tuesday. Annual inflation, measured by Australia's Consumer Price Index, slowed to 4.9% in July from 5.4% in June. Although this was significantly over the RBA's target range of 2 to 3%, it was the lowest inflation rate since February 2022, owing mostly to a decrease in housing and food price increases. The new data, due on Wednesday, is forecast to show a slight rise to 5.1% on the back of higher fuel prices, among others. The German GfK Consumer Confidence Index is due on Wednesday as well. After being revised down to minus 24.6 in August, the index fell to minus 25.5 in September, far below the minus 24.3 market consensus. As rising inflation persisted last month, consumer morale dropped to its lowest level since May. However, a slight improvement to 24.8 is forecast for October. New durable goods orders in July in the US fell by 5.2% after a downwardly revised 4.4% increase in June. It was the steepest dip in orders since mid-2020, resulting from a large drop in demand for transportation equipment. When the latest figures are released on Wednesday as well, analysis forecast a further 1.6% drop for August. Germany is due to publish its inflation rate on Thursday. The annual consumer price inflation was confirmed at 6.1% in August, down slightly from 6.2% in July and matching May's 14-month low. The core rate, which does not include goods such as food and energy, was steady at 5.5%. The preliminary report is expected to show that a slight drop was registered for September to around 5.9% annually. However, a month increase to 0.6%, up from 0.3%, is also forecast. Final US GDP figures are ready to release on Thursday. The US economy expanded at an annualized rate of 2.1% in the second quarter of this year, compared to a preliminary number of 2.4% and 2% increase in the first quarter. Private inventory investment and non-residential fixed investment were revised down, whereas state and local government expenditure was revised higher. The final Q2 report is expected to show growth of around 2.2%. Again, from the US, pending home sales are due on Thursday. Despite market predictions for a 0.6% decline, contracts to buy previously owned homes climbed by 0.9% month-over-month in July, marking the second consecutive month of growth. August figures are expected to show a further 0.2% climb month-over-month, which may further prove that the housing market is on its way to recovery. Expect a very busy end of the week. The Caixin China General Manufacturing PMI is due on Friday. In August, the index increased to 51 from 49.2 in July, above market expectations of 49.3. This was the fastest rate of manufacturing activity growth since February. However, a slight drop is expected for September to around 49. The services sector is also due to report and is expecting a growth from 51.8 in August to around 52.6 in September. The UK will confirm its GDP for Q2 on Friday as well. Preliminary estimates revealed that the British economy grew by 0.4% year-over-year in Q2 after a gain of 0.2% in Q1, above predictions of 0.2% growth. Despite forecasts of a flat quarter-over-quarter reading, expectations are for 0.2% growth in Q2 from Q1. Early inflation figures are due across the day from France, the Eurozone and Italy, among others. While inflation has fallen markedly from many European nations, progress is beginning to slow. A drop from 4.9% to 4.8% is seen for France, while the Eurozone is expecting a rise from 5.2% to 5.5%, and Italy may see a slight drop to 5.3% from 5.4%. The US core PCE price index, excluding food and energy, increased by 0.2% month-over-month in July, matching market expectations. As expected, the annual rate, which is considered the Federal Reserve's preferred measure of inflation, increased to 4.2% from 4.1% in June. When the news figures are released on Friday, another 0.2% rise is expected for August. Released concurrently for the US, the month-over-month personal income and personal spending reports are due. After a 0.3% increase in June, personal income increased by 0.2% in July, just below market expectations of a 0.3% increase. Meanwhile, personal spending in current dollars increased by 0.8% in July, the most since January and exceeding market expectations. Further gains are expected for both spending and income for August of around 0.5% and 0.4% respectively. If you would like to read the full outlook, please visit the analysis section of our website. That's all for this week. Happy trading!